Hey, what's going on out there, everybody in the world, ladies and gentlemen, men and women, males and females? Welcome to another video. I want y'all to share this video, subscribe to the channel, like the video so the notifications can accelerate, and it'll show that there's a human being out there with a message to uplift those who down financially, mentally, physically, spiritually. But anyway, today I want to discuss the S&P 500. A lot of people want to start the new year out investing, and they don't know how to go about and what to invest in, and what platform to look at, and how much money they should save, things of that nature. So we just want to get in real quick about the S&P 500. Now, this is an index fund. So you have stocks, you have index funds, and you have cryptocurrencies such as the Bitcoin and Ethereums and so on and so forth. But this specifically index fund is the S&P 500, which it holds 500 major companies in the United States, like Apples and the Amazons, and it's all a balance. Is a balance index fund for people who want to put their money into investments as a safe hazard. They want their money to be secure and safe. This is an index fund to put it in. So instead of investing in individual companies, you might just want to allow the platform, I ain't gonna say the platform because we're gonna get to that in a minute, but you want to allow the index fund to work for you pretty much. So when everything's down, the index fund is down. Like if the index fund is down, everything is down. When the index funds is up, that's when everything is pretty much up. But you definitely want to, the index fund is probably like the S&P 500 is probably like $4,700 right now. So you might want to get one or two of those, depending on your funds. You can get 10 of those, 20 of those. Rich people got, a lot of those shares in their portfolio balanced out. So you definitely want to wait to the support level when it gets back down to approximately, I'll say $1,500, when everything go back down and depression hit, and everything is, at a lowest point. That's when you want to jump back in. So right now, you just want to keep saving and stack money. So when everything's dropped, you can jump right in and grab your share of those, maybe a few of those, and then hold it when it get back up to 1,500 or so. But I'm gonna give you a better explanation on what the sources say and what it's about, and you can get a better understanding. All right. Okay, so the S&P 500 is a market index that represents the performance of about 500 companies in the United States. Only large cap companies who fit pre-specified criteria are included in the S&P 500. A lot of well-known companies such as Apple, Amazon, and Microsoft are included in the S&P 500. However, popularity is not a requirement, and lesser-known companies are also included. Regardless, the companies within the S&P aim to represent 11 business sectors: energy, real estate, utilities, communication, services, materials, industrials, consumer staples, healthcare, financials, consumer discretionary, and technology. All right. So pretty much it's obvious you don't have to do too much of a fundamental analysis on this. Like Yahoo Finance, it speaks for itself right here that these are the companies that's all bundled together that you're getting when you invest in the S&P 500. Let's go to the charts. Okay, so check this out. This is the Webull platform. Okay, now what you want to do is you want to always put whatever you're trying to invest in on your watch list, so you can watch it. And then this is technical analysis. So now this is an outlook on everything. Now from the time period of, this go way back to 1999. Let's see, 1999, this was at 12. Now we see here, it went down, it dropped again. Now y'all see in the top left corner, you'll see July, you'll see 1998, October 30th. It stopped right here. Check it out. The top left corner. You see where it's at? It opened at $1,017, right? All right, so as I move up in the years, look, y'all, it dropped back down. In 2003, it came back down. May the 30th, 2003, it opened at 916. See how it went back down from that time? and it went down. So then that's what it's going to do again. The history always repeats itself. And then it goes back up from there. It was 12 in 2005. And then it climbed its way right back up 2007. And it's climbing back up. See how balanced it is? Look, it went back to that in 09. Look at the top left-hand corner, y'all. Look how it went back in 09, 793. Yep. It has its moments. These is the times you got to wait for when it dipped back again, because it's going to do it. There's a history that's telling you this. So as the years went on, look where it's at now. It went up to 2. Now it's at 40. We at around 48. All right. So basically, this is what you want to do. You want to definitely invest in this. All right, because it's going to go back down to where as though you could jump in, and it's balanced out with all the major good companies that's out there. So stack your money, build your buying power. You ain't got to invest in nothing yet. Just build your buying power and wait for a right time to jump back in from like the history y'all just seen. You ain't got to wait for it. I don't think it might not hit $800 again, but it's liable to go back down to maybe 2 or 1,500, so on and so forth. Okay, so y'all definitely want to take some time, build your buying power, and jump in at the right time, as y'all see here in the charts. All right, peace and love. Subscribe to the channel, your boy.